Welcome to the market opening bell for Tuesday, August 19th, your 10-minute guide to the stock market. US President Trump announced that no immediate action will be taken against China for purchasing Russian oil. On the mainland, the Shanghai Composite Index surged over 1% at one point, reaching a near 10-year high. Hong Kong stocks initially rose but later retreated, with the Hang Seng Index opening 23 points higher and peaking at a 196-point gain to hit 25,466. However, selling pressure intensified in the afternoon, leading the index to close at its daily low of 25,176, down 93 points or 0.4%. The Hang Seng China Enterprises Index dipped 5 points to 9,033, while the Hang Seng Tech Index gained 36 points or 0.6%, closing at 5,579. Total market turnover reached 312.7 billion Hong Kong dollars. Southbound funds recorded a net inflow of 1.386 billion Hong Kong dollars into Hong Kong stocks, with notable net purchases including China Life Insurance at $672 million, Alibaba at $617 million, Hua Hong Semiconductor at 389 million, Tencent at 299 million, Oriental Selection at 299 million, and SMIC at 162 million. On the other hand, net sales included the Tracker Fund at 6.413 billion, Hang Seng China Enterprise Index ETF at 1.445 billion, Hang Seng Tech ETF at 573 million, Xiaomi at 210 million, and Kuaishou at 149 million. Data indicates outbound funds have been net buyers of SMIC for 5 consecutive days, totaling 1.035 billion Hong Kong dollars, and of Alibaba for 3 consecutive days, totaling 2.526 billion dollars. From a technical perspective, the Hang Seng Index reached a high of 25,466, filling the downside gap from last Friday between 25,450 and 25,357. The closing index of 25,176 was close to the 10-day moving average of 25,121 and the 20-day moving average of 25,160. Investors should remain cautious as a break below these levels could lead to filling the upside gap from last Wednesday between 25,016 and 25,177. Should the index fall below 25,000, the next support level is at 24,800. Mainland Asia's opened strong and maintained upward momentum, with the Chinex index rising over 3% at one point, though gains likely moderated in the afternoon. The Shanghai Composite Index hit a high of 3,745, marking a near 10-year peak, and closed at 3,728, up 31 points or 0.9%. The Sunshine Component Index reached a high of 11,929 and closed at 11,835, up 200 points or 1.7%. Combined turnover for the Shanghai and Shenzhen markets total 2.764 trillion yuan, an increase of 519.6 billion yuan from the previous day. The renminbi central policy rate rose to a 9-month high of 7.1322 against the US dollar, up 49 pips from the previous trading day, marking the highest level since November 6 last year. The People's Bank of China's second quarter monetary policy report highlighted a more complex and challenging external environment, emphasizing the need for forward-looking, targeted, and effective macroeconomic adjustment. The bank aims to maintain policy continuity and stability, enhance flexibility and foresight, strengthen policy coordination, and focus on stabilizing employment, businesses, markets, and expectations. In the Hong Kong market, China Literature Group saw its share price soar by 15%. The company announced a national creative content strategic cooperation plan with Tencent's flagship game, Honor of Kings. The partnership will explore opportunities in national creative content with China Literature subsidiary Yuewen Goods launching exclusive peripheral products now available for pre-sale on official flagship stores and the Honor of Kings official mall. Additionally, China Literature's best-selling fantasy novel Lord of the Mysteries will collaborate with Honor of Kings to launch exclusive game skins related to the novel. On the earnings front, China Biopharmaceuticals reported interim continuing operations revenue of 17.575 billion yuan, up 10.71% year-on-year, with a gross margin of 82.5%, up 0.4 percentage points. Profit attributable to shareholders was 3.389 billion yuan, up 12.31%, with an earning per share of 18.82 cents and a mid-interim dividend of 0.05 Hong Kong dollars. During the period, two innovative products, Putaning and Anqixin, were approved for listing by the NMPA, with innovative product revenue reaching 7.8 billion yuan, up 27.2% year-on-year. Five generic drugs were also approved, and overall generic drug revenue maintained positive growth. Tongcheng Travel reported interim revenue of 9.047 billion yuan, up 11.5% year-on-year, with a net profit of 1.311 billion yuan, up 57.9%, and an earning per share of 0.58 yuan, with no dividend. Adjusted net profit rose 28.6% to 1.563 billion yuan, with the adjusted net profit margin increasing 2.3 percentage points to 17.3%. Average monthly paying users grew 9.2% to approximately 46.5 million. Xtep reported interim revenue of 6.838 billion yuan, up 7.14% year-on-year, with profit attributable to shareholders at 914 million yuan, up 21.47%, and an interim dividend of 18 cent Hong Kong cents, up 15.38%. Meitu reported interim revenue of 1.821 billion yuan, up 12.3% year-on-year, with a net profit of 397 million yuan, up 30.8%, and an earning per share of 0.09 yuan. The board proposed an interim cash dividend of 0.045 Hong Kong dollars per share from the share premium account, compared to no dividend last year. Non-IFRS net profit was 467 million yuan, up 71.3%. As of June, Meitu's monthly active users reached 280 million, up 8.5% year-on-year, accelerating from 6.7% in December 2024. Paid subscribers totaled about 15.4 million, with 13.6 million from lifestyle apps and 1.8 million from productivity tools. In May, Meitu announced a strategic partnership with Alibaba, securing a $250 million convertible bond investment. Meitu plans to launch an AI try-on feature with Alibaba, integrating its AI capabilities with Alibaba's closing resources to enhance the online shopping experience, expected to drive transaction conversions via product detail pages. Company announcing earnings today include Xiaomi, PopMart, Sunny Optical, Wuxi Biologics, China Resources Beer, Xpeng, Ping An Healthcare, CGN New Energy, Longyuan Power, Concern Pharmaceutical, Innovent Biologics, Fuyao Glass, Yanco Australia, and ZTO Express. The market is focused on the meeting between US President Trump and Ukrainian President Zelensky, as well as anticipation for Federal Reserve Chairman Powell's speech on Friday at the Jackson Hole Global Central Bank Symposium. US stocks fluctuated within a narrow range, with the S&P 500 index dipping less than 1 point to close at 6,449. The Dow Jones Industrial Average fell 34 points to 44,911, while the Nasdaq Composite edged up 6 points to 21,629. The Nasdaq Golden Dragon China Index, which tracks Chinese stocks, rose 9 points or 0.1% to close at 7,650. Meta dropped 2.3% following reports that the company plans its forced reorganization of its artificial intelligence division within 6 months. The latest AI unit, Superintelligence Labs, will be split into four groups: an unnamed laboratory, a product team including Meta's AI assistant, an infrastructure team, and the Fundamental AI Research Institute, focused on long-term research. Earlier, Meta consolidated its AI operations into Superintelligence Labs due to executive departures and a lackluster response to its latest open source model, Llama 4. Tesla saw its stock rise 1.4% after unveiling a six-seat Model Y L in a new teaser on Weibo. Nvidia gained 0.9%. Novo Nordisk climbed about 4% after its weight loss drug Wegovy received approval from the U.S. Food and Drug Administration for treating severe liver disease. Our stock pick today is Angelalign Technology, stock code 6699. Angelalign Technology primarily focuses on providing digital orthodontic solutions driven by a dual engine strategy of digitalization and globalization. In the Chinese market, the group strategically expands its sales and clinical medical teams based on the developmental characteristics of different city tiers. It offers medical service support to various types of dental professionals, including case diagnosis assistance, 3D treatment plan interpretation, and follow-up monitoring recommendations, ensuring the quality of each case. The group's medical design and customer service teams have upgraded to a 7 times 12-hour service model to promptly address user needs. In 2024, the group achieved approximately 218,700 clear aligner case shipments in China, maintaining its leading market position. In global markets outside China, the group emphasizes enhancing doctors' user experience, maintaining high-quality medical design support, and ensuring stable delivery cycles. In 2024, it achieved about 140,700 clear aligner case shipments globally, spanning over 50 countries. In terms of products in the field of early-stage orthodontic treatment, the group promotes the concept of teeth, bone, muscle, three-in-one solution, and abide by the principles of age-based treatment and symptom-specific treatment. It focuses on comprehensive oral health management for children and adolescents, driving rapid growth in its children's edition product line. In the field of adult orthodontic treatment, the group prioritizes correct efficiency and effectiveness, offering high-quality treatment plans and medical services. Technologically, the group leverages computer technology to advance digital orthodontics from initial patient consultations and assisted diagnosis to treatment planning, production, and process monitoring. In the first half of last year, it launched a series of digital tools to enhance dentist diagnostic capabilities, including iSmile Maker, iDiagnose, Live Now movement evaluation, and progress analysis. In the second half, it introduced new treatment plan design features such as flexible virtual jump, modified passive aligners, enter figures to modify tools, angel button collision detection, and autosave. These tools help dentists comprehensively review and modify cases, optimizing workflows. In January this year, the international version of the iAuthor app was officially launched, retaining standard features like case submission and management 3D treatment planning review and approval, and introducing new mobile terminal functionalities, including portrait and intraoral photograph, and local upload of intraoral scans and CT data. The group will announce its interim results on August 25th, next Monday. It previously issued the profit alert expecting net profit for the first half of this year to range from approximately 13.4 million US dollars to 14.8 million dollars, a 538% to 604% increase compared to approximately 2.1 million US dollars in the same period of 2024. This is primarily due to strategic price adjustments in its core China business to address intense competition, sustained revenue growth outside China, delayed progress in establishing overseas production facilities leading to lower investment and operating expenses in the first half of 2025, and a low profit base in the first half of 2024. Recommended buy price 68 Hong Kong dollars, target price $74, stop loss $65. I do not hold the aforementioned stock.